Hi guys, welcome to the part 2 of module 1, which is structure. And today I'm going to show you, in this part I'm going to show you guys how to, in a real chart, how this structure plays out, how you can identify it in a real chart. Okay, this is GBP USD, we normally call it GU. As you can see, this is an uptrend. Let me draw a trend line. You can see this is an uptrend. This is an uptrend until this structure is broken. So now you can see this is an uptrend. So let's now go back from, if you have not watched the part 1 of this module 1, please go back and watch it so that you'll be able to follow us as we go on this journey of SMC trading in 2023. So now let's grab an arrow. As you can see, this is 1, this is 2, this is 3, this is 4, let's use this is 5, this one, there is a momentum up, did not even pull back to, and came back, double top, then break structure. Okay, now let's use this as an example. As you can see now, this market here have, this is high. Let me use let me pick up a highlighter. This is high, this is high, this is low, this is higher low, this is higher high. As we stated that for a trend to be, there must be, you need to a maximum of 4 structure points to make a trend. So these are 4 structure points we needed. So as this trend continues, as you can see, this market has, this is the first high, this is a low, then it makes a higher high and break this structure here, then it now come down. Let's check the Fibonacci. Let's know if it actually retraced up to 50. I'm coming, guys. Let's actually check if it retraced up to something percent. As you can see, this market reached like 61% zone. This zone right here is 61, so is a probable trade, a trade that can give you a good risk to reward. So as you can see, this market retraced to 61% level before pushing back and breaking structure downward. Okay, let me remove this Fibonacci. Then you now call me again, break another structure, which is this. As you can see, it broke another structure upward, but at this time around, the market didn't even retrace up to 61%. I think it's only 50% it was able to, it retraced. This is 61%. It reached 61% before it started pulling back, which is very good. Okay, now look at, as you can see now, see what happened here. See, it's 61%. This is 61% zone. This is 61% zone. This zone now is 61%. Zone. So now, as you can see, let me remove this. Let me remove this fib. Then As you can see, let me shift this trend line. Let me shift a little bit. Let me show you something. That was in the last video. I made mention of when a pullback does not reach 61 or 78%, that you should be careful while entering a buy trend or a sell trend, depending on the trend line you are looking at. As you can see here now, let me use this arrow and look at this market pull back to this zone and then do a little retracement. So people that are not careful will enter trade here and thinking that the market is moving in their favor. As you can see, the market now come down and stop them out and then continue moving in this direction. As you can see, it stopped them out and enter 61% level. Let me pull that fib again. Let me pull that figure again. As you can see, this is 61%. This is 61% level. This zone now is 61% level. So as you can see, this one does not reach 61% and it retraces a bit and then come here. So this is basically that inducement I'm talking about. This is a money in the market. So people that entered market here, it will come down and stop them out and then start pushing up again. So this is basically how you can identify an uptrend in the market and how to leverage on trends to actually make money and enter buy position. So let me remove this chart. Let me remove these drawings and then let's go to a downtrend. Okay, now let me still bring back the trend line. As you can see here, I'm going to kill one bird with one stone. Sorry guys, kill two birds with one stone. As you can see now, this is something that is very nice to see. So when the market reached here, as you can see, it came to this point, come back to this next zone, and then came and retest this zone, which is a double bottom or equal high. The retail trader call it double bottom, while the SME trader call it equal high, and equal high is more like a liquidity inducement. So whenever you see this thing, be careful about it, because normally market will surely come and break it. So when this market came here, this is a trend line it has been following. So now this market, instead of breaking this, it respected this particular zone and then break this trend line. Then when it broke it, it now came back and retest this trend line and then pull back down. So now you can see now that this market have change in character. This is the next zone. This is the next zone. You can see. So this is the zone that it has broken. This is this zone now. It has broken this zone, as you can see. So now what you'll be looking at is for market to come up and then pull back down again. So now you will not enter market. Remember, when the market is doing like this, avoid entering, because people will try to make all the money in the market and then losing their money. So what you have to do is wait for this market that has broken this zone. Now go and mark out the zones you are expecting this market to come to. This one is one. Another one is this upper one here. These are other blocks that you expected the market to respect when it come up. So now when this market break this zone, it come up here and then the trace break this and okay, the first thing, it broke this zone. Now what you have to do is to wait. Then you waited and this market came up here again and respected this zone and then dropped. So now it dropped to this zone. Let me use this arrow and the market. So this one is not even the net is not part of the trend. It's more of internal structure. So you are going to make use of this one because this is the one that broke the zone. So now you now have that there is another break of structure. This is another break of structure. What we normally call this one is a change of character, because this is the first break of structure we are having, because this market, instead of moving up, it now break the previous low. So there is a change of character. Then the break of structure begins here. So whenever you see this, you know now, you will know that there is already break of structure, BOX. So this is break of structure. Then what you now do is, this market has broken structure. What you now do, this is the zone. You now come and mark out this zone. This is the zone you are going to mark out now. You're going to mark it out, this other block here. Mark it out so that when market entered it, you'll be able to push. So now this market now come here, you understand? And then it pushed up to this zone. It pushed up to this zone. So instead of respecting this particular one, it respected this one. So most of the times you will, using this approach, you will miss a lot of trade. But it's better you miss a trade that will put you in trouble than to enter the trade and later on the market will not be what you are expecting. So it's better you miss it. So as market pull up here and then came up, back up, and then it didn't hit this particular your zone, you just need to allow it. So when you allow it, one thing about market is patience. When you are patient enough, you will eat the fattest bone, honestly. Look at this. This market now respected this, the other one, and then break another structure downward. As you can see, it now came up again to retest this previous this thing. Look, let me mark it out now. This zone now, let me mark it out. This zone, we have this zone. So as you can see, market respected this zone here. So when let me say you enter sell position here at this zone. This is the zone, and then you set your stop loss above this this high, and then your first take profit zone should be at this zone. This is your first zone. Can take it down more. So since this market have break, your first breaks of structure take profit should be around this zone. Understand? So now as you can see, this market now started pulling down. If you have entered this market there, you can see that you are going to make a lot of profit. Look at risk to reward is 12 to 1 is to 12 reward ratio. So let me say you are risking $100, you'll be getting 1200, which is $1,200. So which is a good trade. So this is basically what you see when you are talking about trend. This is a downtrend. It broke the structure of uptrend and then enter downtrend. So this is basically what downtrend is all about. How to trade it. With time, I will be able to tell you how to confirmation entry, how you can see, like, be able to enter the trade without risking much. What you are going to see to show you that this is the time to enter, that's what we call confirmation. Because it's not basically seeing this structure, break of structure. You cannot enter any point. This place is the zone, point of interest we are looking at, but what will tell you when to enter trade is very important. This is a POI, point of interest. But to enter to trade, you need the additional confirmation for you to enter. You cannot just enter the trade, understand? So that's why you should be careful while making trading. You should be very, very careful so that you will not lose your money. It's always good to avoid risky trades and make sure you refine your trade very well so that you'll be more profitable and make a good risk to reward. So this is basically what showing you the trend and then the downtrend and the uptrend in the chart. Also, remember that market is fractal. What I mean by fractal is that in the midst of all these, okay, let me remove all these drawings now. In the midst of all these drawings you are here, you can see that, as you can see, this market now, let me draw downtrend. This market is downtrend. This is downtrend. Come up, come here, come down. As you can see, this market now is a higher time frame, daily time frame. Okay, let's go to like something like 1 hour. Let's see how it plays out. You can see that there is a series of uptrend and downtrend inside this particular zone we are looking at. Where is this? Where is the zone we are checking? Let me go back to 4 hour and try to look into it. Where is my... I'm coming, guys. Let me know. Okay. So I'm making use of this upper part. So now what I mean by market being fractal is that inside this trend now, this higher time frame trend that you still see, let me change the color of this arrow. Let me change the color of this arrow. Now you can see that inside this you still have something like this. Inside the arrow, you can see there is an up and trend movement inside the arrow. When you are going up, you are seeing something like this, as you can see inside the arrow. This is a smaller time frame movement pullback inside the arrow too. So as you can see, this is actually what we mean by market is fractal. So depending on the time frame you are trading, it's always good to know the time frame you are making use of. Don't worry, after this I will change the color of this last drawing so that you'll be able to get a clear picture of what I'm doing. Okay, now let me change the color. Also, what I mean is, that inside this long red trend line, we also have an internal trend. So as you can see, this is a pull down, but you can see inside this trend that you have an internal angling boom inside it before it now breaks structure. So for you to be profitable, always follow the trend. I don't advise people to this pullback you are seeing here. I don't advise people to trend pullback when you are in a downtrend. So always follow when your internal trend meet the external trend, meaning that this is let me mark out external structure here. This is external structure. This is external structure one. I'm coming. This is external structure. This is external structure. Okay, now as you can see, this is external structure. So it's always good that when you are trending a downtrend, always follow the external structure. So let me say that you are trending this down, you are trying to enter a sell position. Let me say you entered at this zone. Let me highlight it, this zone now, this zone, and then you now move the market down here. Don't try to follow the market and pull back. What you need to do is wait for the market to come to this zone, and then ride the market down, instead of trying to check and then trying to know when the market follow it to buy back before you now. Always follow the trend. The trend is your friend. The trend is your friend. So when market is a downtrend, always try to enter market when you have a downward movement in the market. Is always important, because this pullback you don't know when the market will reverse, and if you enter, it will take you out. So that's basically what you need to know. That's basically what you need to know, and it's very important that you note it. So this is it about structures, internal structure, the fractional nature of the market. So as you can see, this is let me remove drawings. Let me go to GJ and show you use another chart. Use another chart to show you some things. Okay. Okay, let me use it. Okay, look at this. Though this is not actually clear, but is still a good example. Let me look for something that is clear. Okay. Let's use from here to here now. From this is first one. This is an uptrend. An uptrend. Bam. Come down here. Pull up. Come down again. Push up. Come down again. Then push up here. Okay, now this market now this is a daily time frame, and you can see how the market moves up. So, but if you go to let's say 1 hour time frame and look for this part, let's look for this part in a daily time frame. Let's look for this part in let's look for this part. Let me know if I can see it. The place I highlighted now. Where is it? Let me go back. Sorry, guys. Let me try using this 4 hour to know if it will be close. Okay, we have seen it. As you can see, this is what we drew before, but as you can see, let me zoom in. Let me zoom in so that you see the internal structure we are talking about, which is the fractional nature of the market. So as you can see now, inside this daily time frame, that is here, you can see that there is still another internal structure you can see here, which is this uptrend. You can see, so there is so many opportunity for you to enter the market, as you can see. So what this thing means is that if you don't enter the market here, you still have another opportunity to enter here. to follow this bigger picture trend. Also, this you can enter here to follow this. You can enter here to follow this. Then before now, you can now join. This is a pullback. Since this thing is a uptrend, I don't advise this pullback. What you need to do is, if you miss this opportunity and you find out that markets have retraced, just wait again for this zone. Wait again and look for confirmation. But at this point in time, I don't think you need, you will start trading until we show you how to use a confirmation to trade. At this zone, you will now enter again and follow the trend. Always follow the trend. Trend is your friend. So this is the fractional nature of market. Inside a bigger picture trend, a higher time frame, the smaller time frame also has a internal structure within. You understand? If you open this particular one now in a smaller time frame, this 4 hours, you will still see an internal structure within it. So that's basically what it means. That's basically what it means. So that is it for our structures and the understanding of structure. With this, you guys will be able to cope as we enter the next module of this course. Thank you. Remember, this is Isokay FX, and please subscribe to my channel and turn on the notification so that you will be notified when I drop a new video. And then comment, tell me the video, your problems, and what you would like me to talk about in the videos I'll be dropping. And then please share it, comment my video if you like it to your friends so that we will grow together. We are just beginning this masterclass. You can tell your friends to join so that you'll be able to cope as we move on in this masterclass course. I made this thing public to help everybody. Basically, I'm not supposed to be teaching this thing publicly, but it's basically I have this passion to train people, a lot of persons on Forex, because a lot of persons have been making a lot of mistakes in Forex. With this knowledge, you'll be able to avoid a lot of mistakes you are doing. Using smart money concept will help you a lot in so many ways that you cannot even imagine. So see you in the next module. Thank you, and please subscribe to my channel and help my channel grow so that I will keep bringing up content for you guys. Thank you.